since our fabric division was not optimally running in the last quarter, so we can have the possibility to improve upon there. And also some small pile-up can further aid to our revenue going forward.
Oh, okay. But on a normalized, so just wanted to ask sir that is like a 4,000 crore top line possible this year, or would that be possible next year?
Not possible with the current capacity.
Okay. Fair enough, sir. And I just wanted to know that in the budget, has our industry been given some benefits in case?
At least from what I heard from the finance minister, I don't see anything which has come to textiles. Of course, we have to still see the fine print if there is anything. But on the face of it, it looks as if nothing is coming. Only the programs which they have launched for the skilling and the initial worker, some advantage to the manufacturing industry. That is a welcome step, which should help us in garnering more workers and persons for our manufacturing operations.
Okay, fair enough, sir. I just wanted to understand, maybe exports have been slightly higher in this quarter. So is the domestic demand a bit muted, or, could you just, maybe picture like what is happening with the terms of export and domestic split for us?
Actually, as I was saying, that normally our export split is 60 to 40. And normally our fabric is more into the domestic market. But since our operations, we had a major maintenance in one of our weaving and processing plants during the last quarter. So because of that, our capacity was underutilized. And if that would have been fructified and that sales would have come in, I think the ratio would have been 60-40 only. It is near to 60-40.
Oh.
So you should consider it as 60-40 only. If you see our fabric sales, it is lesser than the previous quarter and previous year itself.
Okay, fair enough, sir. Yeah, that clarifies me a lot of questions. Thank you so much, sir. All the best, sir.
A reminder to all participants, you may press star and 1 to ask a question. The next question is from Chirag Jain from Yogya Capital.
Hi, sir. Thanks for the opportunity. Sir, first question was on the spread. So can you comment on what are the current spread of yarn versus the cotton?
Basically, if the cotton to yarn spread is about 100 rupees a kg at this point of time. For the average of 30 pounds.
Okay. So they have moved up from around 80 per kg level to around 100 per kg level.
Last year it was, in the same quarter, it was at about 86 rupees, 86, 87 rupees. Now it has moved from 86, 87 to 100 rupees.
So how do we see them over the next 2 quarters or next 1 year?
If you see a good demand pickup, this may further improve going forward. That is, it all depends on the kind of demand which we have here. So demand pickup depends on a lot of other factors apart from various other economic factors as well. As such, what I can say is cotton prices internationally and in India are near to its bottom. We do not have much scope from here to go down. So from here, then the only thing which we can have is improvement in the prices. Similarly, in the yarn prices also, they are nearly at the bottom of the price level.
Fair enough. Sir, second question was on the planned expansion side. So are we evaluating seamless knitting machines on that part?
Pardon? Which machines?
Seamless. So which don't have any, which don't require any break in between to join them. Seamless knitting machines.
We are evaluating various things. So I do not want to comment on one particular product itself. So we'll come up with whatever we are planning. So we'll definitely let you know whenever we are ready with this for the plans.
Fair enough. That's all from my side. I will get back in the queue.
Yeah.
Thank you, sir. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from Varun Gajaria from Boring AMC. Please go ahead, sir.
Hi, sir, and thanks for the opportunity. So just wanted to understand how is the demand panning out in the U.S., considering last year was kind of patchy.
This year it is better than last year. I must say that first 6 months have been reasonably better than last year, and we expect this trend to continue.
Okay. So are retailers now taking a little bit of a conservative stance on stacking up inventory?
I think this is a strategy call which each retailer has to take on its own. But in considering if we consider the raw material prices, then it is at the lowest level. So considering that, it should be they should be taking a call to improve upon. Already they have destocked quite a lot of quantity. So
and what is the price of? Sorry.
Yes.
So currently, what is the price of US cotton? I suppose it went up till 83 cents, right?
Pardon? Which cotton?
US cotton.
US cotton is like you are talking about the futures, but that is not the price of the raw cotton. That is the basis on that basis. Today, the US cotton, the New York future is at about 71 cents at this point of time.
Okay. While Indian cotton would be?
Around 86 cents.
86 cents. Okay. Do you see any impact because of this, the gap between the two of them?
Definitely, but this New York future is a future. I mean, this is a price which is a spot price which needs to be built in with various quality premiums and other costs which are involved. So landed costs are more or less like 87, 88 cents only for the US cotton. If it is landed cost in India would be not less than 87, 88 cents at this point of time. And also we have to see when they are going to come in. Means we all talk about their prices, but we have to see their logistics, whether they are able to ship or not, and even if they have produced, they are capable enough to ship that kind of quantity or not, is very, very important to be seen.
Okay. And how is the demand currently in the domestic market? Is it better than what it was last year?
Demand more or less is stable in the domestic market. It is not. I would not say that it is very, very high. It's just stable. Downstream segments are some of the segments have improved in comparison to the earlier period. Knit segment particularly has improved, which was down a lot during last particular year. We are seeing some improvement in the knit segment. So there is an improvement in all around in the segments, in downstream segments. So it's a stable kind of demand.
Okay. Thank you. Thanks for taking my question.
Thank you, sir. The next question is from Manoj Jetwa from KSA Lines Shares Securities.
Good afternoon, and thank you for giving an opportunity. During last call, you had mentioned that we would be exploring the opportunities of exports in Japan and African markets. So any update on that, sir, regarding?
We have been successfully able to do that also. We have increased our footprints in both these markets. We are already started to export already in these markets, and going forward, we expect it to go better from here.
So what all the countries we would be targeting? South Africa, Eastern markets, or which part of the Africa we would be looking the opportunity?
There are frankly, on a earning call, I would not like to share our marketing strategy. So I would not like to go in the details of which particular market or which market we are targeting. But yes, I can share with you that definitely we are trying to increase our footprints around the various markets where we are not present at the moment.
Okay. And same is the case with the Japan also, sir?
Yeah, definitely. Definitely we have made some inroads and we are trying to increase the same.
Okay, so we see the huge opportunity for new geographies as far as Japan and Africa is concerned, as far as our export business is concerned. Am I right, sir?
Basically, we're trying to maintain our export share and diversify the markets. That is the strategy. We do not want to be dependent on some one or two markets. So that's why we keep on exploring new markets so that we improve upon our geographical diversification as well as improvement in the realizations as well. So once you are not dependent on some particular market, you are able to navigate it better. And when you have so much of geopolitical upheaval happening all around the world, so it is better to diversify geographically as well.
Thank you. Thank you. That's all from my side, sir.
Thank you, sir. The next question is from the line of Naima from Bajaj Allianz Life Insurance Company. Please go ahead, ma'am.
Good evening. In our last interaction, sir, you had mentioned you were talking about specialized products that we were at the time around 35% of our business. Just to recollect, I think you mentioned cotton with linen effect or multifold bags, zero twist yarn, products of this sort. Are we getting to a better mix? I think we were aiming for a little more share in that. So have you seen any difference in the last quarter in this, or are we still more or less at the same level?
We are at the moment we are at more or less the same level of last quarter. Not major improvements from here, not major, but we are trying to get into the areas where so that we can improve the share of this product. In fact, our capacity has increased. So overall, if you see, we have increased the quantities, but share-wise, it is at the same level.
Okay. And do you see this happening more over 1 or 2 quarters, or is it more of a long-term plan?
It's more of a long-term plan, and it is our endeavor to improve upon this so that this helps us in improving our margins. So as a long-term strategy, we are trying to see wherever the opportunity comes and whatever products we can get into.
Okay. Sounds good. I'll get back if there's something. Thank you. All the best.
Thank you, ma'am. The next question is from the line of Aman Vishwakarma from Phillip Capital PCG. Please go ahead, sir.
Yeah. Hello. Am I audible properly?
Yes, you are audible.
Yeah. Sir, I have a basic question on your asset base and the revenues, right? So if I were to look at your asset base in 2019, it was roughly, so I'm specifically talking about the gross block. So it was about 600 crores of gross block, which has now grown to 1400 crores, right? So a rough addition of about 1,000 or roughly 800 crores, right? Against that 800 crores, we have also seen a jump of 1,900 crores of revenue in the same period. So, I mean, what is the typical asset turn in your business that you are in? And I mean, what has led to the significant jump broadly?
Actually, what you are referring to is the net block, not the gross block.
Okay. No, but I believe the gross block number is at about 674 crores.
Maishwariji, can you check and confirm what is the gross block? Because as far as I know, 2019, it was much higher.
2019, gross block was 900 crores.
900 crores. And what is the gross block now?
2,500 crores.
Yes.
2,500 crores. Okay, got it.
Yes. Yes.
I mean, when you do announce any sort of CapEx, right? So what sort of ROICs are you targeting broadly?
Basically, the ROI has to be in the range of 15 to 18%. Normally, we try to see on the upper side of the segment that we try to target 18% ROIs. That is what the typical normal which we have for our norms for our capex. And asset turns are normally in the textile asset turns are in the range of 1:1.2 or 1.3 depending on the product segment, except the garmenting part of the business. So
okay, got it. So again on the gross block part, right? So of the 2,500 crores that we have, so roughly we have added about 1,600 crores of assets, right? So could you give me a split between how much you would have spent on the yarn part of the business or the fabric part?
In this 1,600 crore, I think we have spent nearly 1,100 crores on the yarn part and 500 crores on the fabric part.
And what is the broad
This is
maintenance
this is
capex
rough rate.
for your facilities, if I may, the last question?
Pardon?
What is the maintenance capex that you incur on a year-on-year basis?
As such, we do not incur, means whatever maintenance expenses are there, then normally that is being debited to our revenue account.
P&L.
If you do any major modifications and other things, then it comes. It depends on, since we have newer plants, we need not do that capex to that level.
Okay. I mean, I do understand that it is expensed out, but I mean, what is the general run rate, just to get an idea of the operation?
Like about 42, means normally maintenance expenses are in the range of about 2% of the maintenance total capex, total capital cost. So
Okay.
that is a normal figure which we should consider.
Fair. Got it. Thanks. That's all from mine. Thank you.
Thank you, sir. The next question is from the line of Surit Deora from Paladin Capital. Please go ahead, sir.
Hi, good evening, sir. Please pardon me if my question is redundant. I'm new. I'm not looking at this business before, and I'm just trying to understand the growth potential here. I saw that you've done a lot of CapEx, which has been capitalized in the last year. Are you fully utilizing all of that?
Yes, we are utilizing, if you see whatever capacity expansion which we have done, we have nearly reached, in the spinning business, the three segments. We have knitting, weaving, and spinning. In spinning business, I think we are fully utilized. We have reached 95-96% capacity utilization. For weaving business, weaving and processing business also, barring last quarter, we had a maintenance shutdown. We have reached there also on the top utilization level of about 90%. In the knitting segment, it is slightly down, and we are at about 50 to 60% only. So there is still a scope there to improve upon.
Okay, so more or less, this 800 crore run rate is where you would remain unless the prices of your products go up. And I think I heard you say that there is a likelihood of the spreads increasing, so maybe a realization might increase, but volume growth may not happen until you announce the next leg of CapEx.
Yes, exactly.
Okay, and I don't know if you already answered this, but do you have a view on how much realizations can go up by?
It depends on market. Means we have how the cotton, what is the raw material prices and the demand overall pans out. It depends a lot on that. But I can say that the finished goods prices are near to the bottom of the cycle.
And so again, this is my ignorance, please pardon me, but I think you mentioned cotton to yarn spread is 100 rupees. What is it been on average in the last few years, and what has it been in the worst?
When it was, the worst has been about 70 to 75 rupees a kg, which was about 1.5 years back, or even in the worst times in the COVID, it was even lesser. But from that time, the cost has also increased. And the best which we have seen is about 130 rupees a kg, 135 rupees a kg.
And this 130 rupees was in which year?
It was in 21-22.
Okay, this was
FY20.
Got it. Okay. Okay. Thank you so much. Thank you very much.
Thank you, sir. The next question is from the line of Nishita Jain from Equitech. Please go ahead, ma'am.
Thank you. So my question is on the Bangladesh market. So there has been issues going on in Bangladesh, which is an important market for yarn exports. So have we also faced some issues there, sir? And we expanding to other geographies, is it in line with that issue? If you can tell about that.
Yes, of course. Bangladesh is a very important market for us as well. But these issues have just cropped in last 5 days. I think last 13th or 14th of July onwards, this problem has come up of education in Bangladesh. I think it has been sorted out, and we expect this to be settled down in another 3 to 4 days' time. So this should not have any major impact at this moment, it does not look to have any major impact on any of the on the businesses as such.
Okay. So, just one more question. So, you did highlight earlier about the benefits you will be getting from the RIPS. So, there is interest subvention and there is also capital subsidy. Can you please elaborate on both these benefits in detail?
We are supposed to get the subsidies about 2.5 to 3% of our outstanding loans, which is about, on a maximum side, this can be about 20 crores every year on the interest subsidy side. Those are the sanctions which we have received for our new projects, apart from what we are already getting for our old projects. As far as this is about interest subsidy, which will continue for next 5 years' time. And on the capital subsidy side, it is in the range of about 190 crores, which we may get for next 10 years. So exact figure must be about 188 crores or 190 crores, which we'll get in next 10 years, which will be every year about 19 to 20 crores.
Okay. Thank you very much, sir. That's all from me.
Thank you, ma'am. Ladies and gentlemen, due to time constraints, we will now take the last question from the line of Ronak from RK Securities. Please go ahead, sir.
Hi, sir. I'm audible?
Yes, please.
Sir, as the cropping season is coming to an end, sir, how was the arrival during the ongoing season, and what is the new crop size expectations in the next cropping season?
The arrivals in this particular cotton season was around 300. At this point of time, it is about already reached 315 lakh bales, and we expect it to end at about 320, in anything between 320 to 325 lakh bales. This is exactly the same number what we had seen in the last year, in 22-23. In the coming year, till now, the sowing has been more than the last year, 3 to 4% more than the last year. We expect that at the end of within the monsoon period, we should be able to do the similar kind of sowing what we had seen in the last year. And yields are expected to improve. A lot of work has been done by Agriculture Ministry as well as Textile Industry to improve upon the seeds as well as the practices. And we are expecting a better crop than last year, definitely.
Okay. So just the last one, if you permit. We've been hearing this FTA from UK from last 1 year. Maybe if you can give some materiality on this, and if at all it comes, how we will benefit from this FTA?
We are in the same boat. We are also hearing about this FTA, also talking to the various ministry officials also about the same, and waiting this to happen. This is an important FTA for most of the textile companies, because there are many brands to which we are catering in the UK, which are again catering globally. So once this happens, it will be an important milestone, an important thing for the textile industry as a whole, and we should be definitely also benefited by that.
Okay. Thank you, sir. Thank you for taking my question.
Thank you, sir. I would now like to hand the conference over to Mr. Avanish Chandra for closing comments. Please go ahead, sir.
Thank you, Dinesh, sir. Sir, before taking your closing comment, before budget, we heard about PLI scheme, textile parks, anything. You want to add on anything, because still a lot of details people are waiting for. So anything positive you are hearing from the government or any side on these things? Yeah.
Still to see the fine prints, we have heard that there are 12 industrial parks which has been declared. Rajasthan was one of the states which was supposed to get one, and in fact, very near to our place in Bhilwara itself, we are expecting an industrial park to come in. So if that comes in, that should help us in expanding our capability going forward. So that is something which is still to hear, but they have not declared that part particularly. So I cannot comment on that. Otherwise, still a lot of things in the fine print, as we all know. There are a lot of things in the fine print, even on the custom side or even on the other side of the various development activities which are happening. So We'll see this more on the once we are through with this, then maybe we can share with you all about that.
Okay, sir. Okay, sir. Thank you very much, Dinesh sir and Maheshwari sir, for giving us this opportunity to host the call. Before closing, any final commentary from your side?
Yeah. I hope we have been able to address all the queries which are there, and I must thank Snehs and Niji for hosting this call for us. And if any further information is required, you can get in touch with our finance team and our investor relation advisors, SGA, for taking it forward. Thank you once again for taking the time to join us on the call. Thank you so much.
Thank you.
Thank you. On behalf of SMIFS Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.